121 exclusion. What is that? Basically, if an owner-occupied person sells their house, they can save up to $250,000 capital gains tax-free if they've lived in there in the last 5 years. So, Tiff, you own your house. You're a single person. You live there for 7 years. You sell it. If you bought it for $1 million and you sold it for 1.5, you had $500,000 cap gains. 250 of that won't be taxed. So basically the money you made on top of it, capital gains is the money you made on top. You're not taxed on that. So you will be taxed on the remaining 250. Cap gains is all that extra money over the basis. So basis is what you bought it for. She bought it for $1 million. She sold it for 1.5. 500,000 is cap gains.
What she puts into repairs, like she puts a new roof.
That also goes into basis. Yes, that does go into basis. So if you do capital expenditures over the time, your basis will crawl. So if she spent another $15, that goes into it. The exclusion part basically is a single person can get $250,000. A married couple can get $500,000. So Tiff and Dane, all of a sudden Tiff's married. She sells this thing for $500,000 capital gains. She keeps all that money. Uncle Sam isn't coming into her pocket. As long as she's lived there 2 of the previous 5 years. Remember this, basis, what you put into it, a sales price, cap gains is the difference, and then $250 for a single person, $500 for a married person. How does this pertain to you? There's a ton of people looking out there to sell their owner-occupied properties, and this is a really good talking point to them. Because if they think, I'm going to hit so much cap gains, it's going to be crazy. Say, hey, have you heard of the IRS 121 exclusion? 1031 exchange. Everyone should be genuinely pretty comfortable with the 1031 exchange. It's a real estate tool to help investors swap one property into another without paying any sort of taxes. Key things to know. So, Tiff owns her property, but it's a rental property now, right? She bought it for $500,000. And then she's going to go sell it for $1 million. She would have had $500,000 of cap gains, right? Well, if Tiff 1031 exchanges into a new investment property, basically takes the equity from one, rolls it into another one, boom, deferred all cap gains. There's no, IRS isn't coming knocking to take your profits, and she can move her money from one asset into another one that's a little bit better. Boot. What does boot mean? So let's say Tiff was going to 1031 out of her $1 million property, but 1031s into a $900,000 property. Yeah, only $900,000 is protected in the 1031. She pays taxes on the remaining boot of $100,000, right? So boot is a really common term used in 1031 exchanges. You throw that around, people are like, this guy knows or gal knows what the hell she's talking about. The property needs to be like kind. That's a key word. So it needs to be a rental into a rental. You cannot 1031 out of an owner-occupied property. That's a common misconception. It doesn't work. That's where the IRS 121 exclusion comes in. So it needs to be like kind. It needs to be income properties only. To fulfill a 1031 exchange, you need to go into the new acquired property for 2 years. And you can exchange into a more expensive property without boot. You just cannot exchange into a cheaper property. So you can go up without paying taxes. You can't go down without paying taxes. Independent third party. Basically, a 1031, the whole thing that makes it a 1031 exchange is Tiff here never actually gets the money in her account. So she re-engages a 1031 exchange company. She says, hey, I'm going to sell this one and buy a new one. When this one sells, the money goes to the 1031 exchange company. 1031 exchange company buys the new property for her. The IRS has been avoided. Tiff owns no taxes. Independent third party. Timeline. These are really the key things you need to know about a 1031. From the close of escrow, when Tiff closes, she has 45 days to name targets. She has 180 days to close on one of those targets, right? So from the close of escrow, not talking about when acceptance of the offer, from the close of escrow, 45 days and 180 days. Reverse 1031 exchanges are possible, if not incredibly complicated and more expensive. So in theory, you can buy your new one.
180 days.
180 days to actually close on it. 6 months. A reverse 1031 exchange is possible, where you can, in theory, buy a property, or the 1031 party can buy it. You can sell your old property and do a switch. Don't even mess with that at this point, because it's so complicated in terms of if there's debt, it needs to be all cash. So you can't get a loan on the new reverse 1031 exchange. So straight up 1031 exchanges are typically the best. How it applies to you. If you're going to be doing any multifamily sales or talking to investors or talking to people that want a vacation rental, around here it's super common where someone's like, hey, I just inherited a property. I'm going to 1031 exchange it into my eventual vacation house. All they need to do is buy it, rent it out for 2 years. Then they don't pay any taxes. So you'll have that with a lot of second home owners coming to the area who are looking for a rental, but their number one criteria is, hey, I'm going to use this as a vacation house. It's going to be sweet. Prop 19, this is the new thing that came out a few years ago, 2 years ago. It is a twofold thing. It is the death of Prop 13, and it also means that you can, certain people can switch properties to different properties and keep their original tax basis. This is all regarding your property taxes out of a property. It used to be with Prop 13, if Tiff's grandpa bought a property for 30 grand, they paid property tax on 30 grand. Tiff's parents paid property taxes on 30 grand. Tiff now owns it. It's worth $1 million, paying property tax on 30 grand. That's fantastic. The government killed that. California killed that. Now, when the grandpa bought it for 30 grand, passes it on to the parents, it's worth 500 grand. New property taxes is 500 grand. Pass it on to Tiff, new property taxes is $1 million. Now, here's the thing. There's one exclusion for that. When an owner occupied leaves it to another owner occupied. So Tiff leaves it to her kid. Up to $1 million house, her kid will keep the original tax basis.
Only up to $1 million?
Only up to $1 million. Transferring tax basis. Now, the other part of Prop 19, and this is the part that really got it passed. If you are 65 years of age or older, if you're a senior, if you are disabled, or if you have been displaced by a natural disaster, somewhat like a fire or something like that, if you can transfer your tax basis to a new property. So Sue, who's 70 years old, wants to sell her home in California and move to a new home in California of equal price, she keeps her old taxes. She wants to buy one of a lower price, she keeps her old taxes. She wants to buy one at a higher price, she pays the taxes at the sales value, and all the extras she pays taxes on. Yes.
Sorry, my problem with my clients is I know that information, but they're like, well, how do I figure this out?
Perfect. Talk to an accountant, because you're not an accountant. You're a real estate salesman. We're never going to be the ones to give people.
Is it an accountant or a law lawyer? Is it a lawyer?
Both of them. They can talk to whoever they want, but it needs to be a professional. We had to take 3 open book tests and then 1 test at the state level to get a real estate license. We are not qualified to do any taxes, right? Your job is to know who to connect people with.
Yeah.
Know an accountant. Just be like, whoever does your taxes should do this work. Yeah. If they say, I do my own taxes, be like, it'd probably be worth hiring somebody.
Yeah, or ask to go on an email chain together, and then we can make the suggestion that they look into Prop 19. And that's really as far as we take it, but we can somehow weave ourselves in.
It's important.
Tax person, not lawyer.
Correct. Or a real estate lawyer, whoever's doing their estate planning, just pass it along to a professional in that field. Hey, if you want to write an offer, go to her. I'm your person. If you want to talk about tax advice, talk to somebody that does that for a living.
Yeah, just giving them a heads up.
Exactly, but you still seem more knowledgeable to know these things, and then you could point them in the right direction. This is all about defeating obstacles. If someone says, I can't move right now, I'm 83 years old, and my property taxes would go through the roof. Ding, no it wouldn't. Prop 19's protected you. You're free to move, your property taxes are going to be the same. It's all about getting around objections. How does it apply to you? Inheritors face huge annual property tax boosts. So now when somebody inherits a property, unless they're living in it and does the owner-occupied to owner-occupied, their property taxes are going through the roof. So it's going to force a lot of people to sell. Elderly people downsizing, this is a huge point for them. And people who have lived in their current property for a long time but fear the consequences of moving, this is a good thing to talk about, Prop 19.
Would you recommend that, say we have a client that's 83, she buys a new house, keeps her prop tax basis, and then she dies, and then would the tax still get reassessed again, or would it be where?
It depends. If she's living in that house and then her heirs go move into that house.
Yeah, that's smart.
Yes, it would be. So owner-occupied to owner-occupied is the only loophole that brings it back to Prop 13.
So if you had a good parent, they would just buy your own, at their demise, buy what you want.
in theory, if they moved into a house that they knew their kids would eventually live into,
Yeah.
but the property taxes don't increase that quickly, so it's really the long game. It's about holding it for 50 years and having that basis. Okay, verify with your accountant. That was on my spreadsheet. Basically, we're not pros at any of this, so no need to answer it as if you are. Okay, that was number 1 on here. I'm going to go briefly to number 2 and just talk about key terms, and then we're going to start our little game. And this is my investors report. A lot of you guys probably should remember some of it. I know a lot of it wasn't kind of sunk in, but I want to talk to you about some key terminology that we're going to be going through. This is for when dealing with investors. NOI. This is going to be one of the basic things that everyone talks about when grading an investment. What's my NOI? That is gross revenue. Everything that the property brings in revenue, gross, right? Not take minus operating expenses. So operating expenses, think the cost of operating your business, that equals NOI, net operating income. Huge one. Cap rate is NOI, how much money you're actually making, divided by the purchase price of the property. It gives you a number. The bigger the number, the better the return. The smaller the number, the crappier the return. So if I'm dealing with multifamilies, I say, well, usually Seaside trades for about a 6 cap, whereas PG might trade for a 3 cap, lower, not as good. And Salinas might be a 7 cap. And so you're able to judge properties. Now, if there's 2 sitting next to each other, someone can look at that cap number and say, this one's a 4 and that one's a 7. The 7's better. They don't need to understand anything else. It really simplifies it down. How much does this property make? Cap rate. You'll hear that all the time. And or cap. Cash flow. This is really the most important thing. Amount of money you pocket each month. Like money comes in, money goes out. What are you keeping in your pocket every month? Cash on cash return. Is it annual pre-tax cash flow? So the money that comes in before you pay taxes divided by cash invested. We all know this about real estate, right? It's leverageable. A lot of people aren't buying with cash. So in theory, they bought $1 million property, but they only put $100,000 down, right? So it's how much money you're making in your pocket divided by the $100,000 you put down, not the $1 million purchase price. That is going to generate your cash on cash return. The actual money that you separated with, how much it's making you every month. I think this is the best key indicator on an investment property, but everyone has their own different metrics they like. Capital expenditures, money spent on improvements that extend the life of an investment. 1031 exchange, we just went over it, so please remember it. And capital gains, basically, something you bought it for, the basis, and then what you sold it for, the difference is a cap gain hit. Literally, your capital gained money, right? Those are the terminology we're going to go under. Now, we are going to break into a Jeopardy game. First person that stands up buzzes, and who wants to go first? Girls or guys? Okay, girls.
Now, are we controlling the board though if we get things right?
Yeah.
Okay.
Oh, yeah.
Oh, there's a prize.
There is a prize. For the prize, I'm going to do this. I will take a day of whatever you want, and I will ride around with you. We can kind of do a buddy system. If you want to learn about investing, I'll take you out with big-time investors, like doing multifamily searches. If you want to see how to tour, I'll take you on an 8-hour tour with people. Whatever you want to focus on, I'll ride along with you. We'll do a full day of like intensive training and going over stuff. So that's what my prize is, me, because I'm the best. Yeah.
Oh, that's good.
All right.
Heaven is your only resource.
Girls go first? All right. What do you want? 1031 exchange, Prop 19, IRS 121 exclusion.
1031 exchange.
Yes,
for 500.
For 500.
That's what I was going to.
Standing up wins it, okay?
No, I thought we were going to get.
Standing up is the buzzer, excuse me.
Oh.
When the property you are 1031 exchanging to is less than the sale of the original home, the additional income is considered.
Boom.
Whoa!
Wait, you have to say what is.
Oh!
Boot. Okay, yes, you were right.
Okay.
Yes, I
And then you hit escape to continue.
Okay, got it. All right, they're leading. You choose your category.
Let's do you want to do
121?
Terminology.
For 500, you guys?
Okay, Prop 19 for
You
500.
think so, girls?
Senior Sue purchases a home number 1 in 1950 for $100K. Sue sold the home number 1 for $500K. Sue purchased a home in California for $650. How much of Sue's new home will be taxed at standard rates? Who stood up first?
Austin.
Also, you should have to answer.
Right
not
now.
have all the time to think.
150.
You have to answer like mid-question.
Yes.
Good job, Austin.
All right.
Okay,
Golf clap.
Go Austin.
Austin.
Let's slow it down here. Let's do IRS 121 for 200.
Oh, in the middle of the board. A married couple can sell their owner-occupied home and keep how much?
500K.
500.
Woo, 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 woo.
500.
Let's go up to somebody else.
Yeah.
All right, girls.
Okay, Prop 19 for 300. Let's
Sure,
look
yeah.
up- Yeah.
Oh, I was just on it. Prop 19 allows blank, disabled. Okay, Austin.
Elderly.
We will accept that as an answer.
Over 55.
Senior
No,
citizen.
no.
No. I'll accept that as an answer.
Grade 6.
That's fair.
Senior
That's scary.
citizens.
Yeah.
It's 55.
It is?
It
It's
might-
55.
Might be
So it's
55.
not.
All right, Austin proved it right. Okay, there we go.
Yeah.
I don't know. I thought it was 65 off memory.
Oh, it is 55?
It's 55.
Oh, okay, good to know.
Well, that's
Okay,
good.
Let's do some terminology. 500.
these are hard. Okay. NOI divided by purchase price. All right. All right, Miguel. No, Miguel said it first.
He's not doing it though.
Gross revenue?
No,
All right.
Cap rate.
Okay.
cap rate.
All right. Team 2 has a minus.
Getting there.
Good try. Yeah.
Okay, you're up.
Let's do 1031 exchange for what do you want?
Whatever you want.
Let's do 400.
400!
When doing a 1031 exchange, the property being sold must have previously been an income property. Must be similar. What is the term indicating similar properties?
Like kind.
Yep.
Good job. Good job,
Okay, we're
guys.
still in this place.
Okay.
We'll do 500 IRS.
When you sell an asset for more than its basis, all the additional income is.
Come on.
Capital gains.
I was scared because no one was seeing that.
Yep.
Like, wait, it's not.
Tie it up.
Good job, Austin.
Was not really so sure about that. Let's do.
I know. Wait, is it too easy?
Let's do 400 IRS.
What you paid for the.
Basis.
Boom.
Good job.
Let's run the board on 121.
Okay. To qualify for IRS, what? Okay.
2 of the 5 years.
All right.
Give me 3.
Oh.
He said two.
You guys said two?
It's
He said
2.
two.
But I think it is 3.
No, it is.
It is 3. I think it is 3.
I think it's 3.
It's 2.
You said two. Misleading.
No.
Okay.
That's
I said 2. I'm going to give it
tell
to.
you what you said.
I think I did say 2. Okay.
But I think it is 2 though.
I think it is 2. I also made this very fast. So.
If it's only 2, I've been saying 3.
I think it-
Now, is it full 2 calendar years or
Well,
just
he
like
said 3, so
I was there in
obviously
2020 and
24
2021?
months, I think.
Listen, all IRS laws are super gray.
Yeah.
And it really comes down to accountant. So
Like 24 months, probably.
people fudge things all the time.
Yeah.
And really depends on how audit safe you want to be.
Okay.
Okay.
Let's do 100.
A single person could sell their owner-occupied home in California and keep how much capital gains tax-free?
150. 250. 250.
Austin?
250.
Okay.
He said it!
No, you said 150.
No, I
So
said
Jen
I
went
meant
down and okay.
I knew that was right. It was a slip.
Let's do Prop 19 for 400.
Come on.
80-year-old Joe purchased a home for $100K. Joe sold the home for $500K. Joe purchased a new home closer to his grandkids for $500K. What is Joe's tax basis under Prop 19?
100K.
Yeah.
Nice.
Nice.
Well, I think I know this stuff better today
Let's
than I
do 1031 for
Yeah.
300.
1031 for 300. When you sell an asset for more than its basis, the additional income is considered.
Capital gains.
I think I
am.
made that.
Every time capital gains, are you scared?
Just throwing those out there.
Okay,
Damn, guys. Come on, let's go.
200.
which one?
1031.
How many days for the close of escrow to client? What? Yeah.
Good job, Melly.
I don't even know what the question was yet.
Close on your 3 targets, 45
Okay.
and 180.
All right.
Okay, 400 terminology. Okay.
Gross revenue minus operating expenses.
Oh, Tip was up. Let's
Tip
go.
was
You know
moved.
why?
Tip.
Oh, she got it.
Whoa!
That was really good.
That's good that you
I
like.
cannot do this without
All right,
looking at
Tiff.
my notes, which luckily I have
Let's
a
do
file.
terminology 300.
All right.
So big.
Annual pre-tax cash flow divided by invested or cash invested.
Cash on cash return.
Yeah.
200, terminology.
Money spent on improvements that extend the life of investment. I think Jen got that.
One of you two did. Yeah.
It's called,
Jen.
wait, the money spent, capital expenditures.
All right. All right, Jen.
Oh,
You guys pretty much need to be perfect here.
Prop 19 for 200.
Prop 19 for 200. How does Prop 13 or inherited basis still remain even with new rules of Prop 19?
Owner occupied to owner occupied.
Good job.
Wow, Austin.
Nice.
That was really, I have no idea.
I guess Austin.
Prop 19, 100.
Prop 19, 100. Prop 19 effectively killed which law?
I think you got it.
Prop 13.
There we go! All right,
Let's do 1031, 100.
1031, 100. How many days from the close of original escrow do your clients have to make?
Woo! Sorry, was I not supposed to shout that out?
You're very right. Okay,
Sorry.
and then
Right, very quickly.
Take the board, Alex.
terminology, the amount of money you pocket each month. I think Jen might have got that.
Gross income.
Okay, that's incorrect, but okay.
Cash flow?
Cash flow.
Cash flow.
Cash flow.
Boom.
Alright.
Got it.
Okay. Now we are doing Final Jeopardy, so I'm going to give everyone a piece of paper.
Oh.
Everyone, go around, and this is going to be the subject today for the Double Jeopardy is going to be active on market. Put down the number that you're going to be risking.
Active on market.
Active on market.
Like, knowing
I'll
market right
explain.
now.
I'll explain the question afterwards, but you always get the hint ahead of time.
Okay.
It's an active on market.
Do we agree on the number as a team or?
No, everyone's now. This is now an individual game.
Oh.
But you guys can risk all up to 3,400. You guys can only risk up to 1,900. All right. Did you guys write down your number you're risking?
Oh, yeah.
Alright.
Yeah. Third time.
Okay.
And how is it gonna do that?
The question here is you have to come up with the most expensive actively listed property that you can think of right now. You need to name the address.
The most expensive that's on the market right now.
Actively listed right now. And it needs to be, I will accept contingent or pending. Most expensive property actively on the market.
Shit.
Testing you guys on how much you're watching right now. You can always default to one of ours that you know the address of.
It has to be a residential.
It has to be residential.
I've never
we're gonna vet-
numbers.
All right, here you go. Got the same.
Okay,
I tried.
let's start off. Tiff, how much did you wager?
1900.
19 is going all in. And what was your property?
156 Ocean View Boulevard.
156. I think it's 186. Is 156 even on right now?
No.
Okay.
I scratched.
Okay.
I can't remember the house numbers.
You have an active listing.
I can't, I'm not,
I was thinking of that one.
You didn't even put your own address down?
that's like the highest one on the market.
But you
if no
gotta
one else
put
gets it.
something
Okay,
Right?
316 9th Street. That's what you wanted me to say?
that you should have at least. How much did you wager?
700.
316 9th Street. Okay, 700. So that puts Melissa at 2,600.
I wagered everything.
19.
Yes. And I said, the Nick Canning property, sea glass on Scenic and 9th. 0 Scenic 9th, the corner. That's the address as well. For
Oh.
18 million and some change.
All right, Jen Jen is at
Get at me, Austin.
38. 38.
I totally misunderstood.
Jen-
So you just had to put any property?
That was
Yeah, I
active on the
totally
market.
heard you wrong. I thought it was the highest one on the market.
Yeah,
Yeah.
the highest one you can think of.
Oh, and I still got the points for
You got the points.
369.
Well,
No, because I beat her. 'cause
But
I-
this-
oh yeah,
She
yeah.
got the
So
points.
Jen only got the points.
Okay,
Yeah.
that's what I was thinking. Yeah.
Jen only got the points right
Yeah,
now.
yeah.
Got one
Sounds
that's
good.
higher than
Jen
Yeah.
currently has the points.
Okay.
Okay, Austin, can you beat Jen's 18 million?
Nope, I put Melvin.
You guys beat 18 million?
18 million. What's 2526 the Cumber?
McCumber. Oh, listen.
Oh my god, so funny. You knew the
Google it,
number
Austin.
from
Google it.
2526 the Cumber.
I think McCumber is only
Less.
8 million
Yeah.
or so.
Yeah,
This is 18.
I wrote Macomber too. I didn't know the number, so it doesn't matter.
I was on the phone with somebody, that's why. They
Good
were interested in that
job.
home.
Wow.
Nice.
Who's that?
Jen, what
It
did
was
you say
Janice
the
Bell,
address
but
was?
she has been a little ghost
Huh?
lately.
Would you say the address?
She hasn't
was?
really responded, but she was interested in that
It's
area.
the corner of Scenic and Night.
You have someone that can afford Macomber.
Apparently,
What? Are
no,
you
no,
trying to
the
get me on
Cumber.
the technicality?
Diego, did you get
Is that
one?
the same thing? The Cumber?
No?
No, no.
Damn it!
Yeah,
Which corner?
it was like 3 million.
What?
Yeah.
What corner?
It's called Sea Glass, the corner
I
of
know, but there's a
Zero.
directional.
Oh my God,
corner.
Boston. I got it. You got nothing.
I got 774 Belden.
I'm gonna give that one to Jen. She got it right.
Yay.
Southeast.
All right, Jen. Good job. Way to come through.